Hey there, everybody. Welcome back to another 21st Century Renaissance and another open interest newsletter breakdown on GameStop. I'm your host, Dr. Michael LoPiano. It is a new week. We have August OPEX coming up. We've got the 13F institutional filing deadline also coming up this week. And I think we have a decent chance to see some volatility come back, even if in a measured way, onto, or I should say, into our trading environments. That's what's coming up today. Before we get started, we will turn our attention to our gratitude. Today's gratitude goes out once again to Samuel Bowser for sponsoring today's article and newsletter breakdown. Thanks again to our monthly supporters, Not Medical Advice, Master, Kurt Lusko, Cosmotropic, DeSwag52, and Hey Luckies. Thanks as well to everybody who, once again participated in our live stream on Friday. These are always great occasions. Good to see everybody back. Good to get some good questions, right? I mean, I can't stress enough just how valuable those are, right? That gives us a lot of time to think through some things, talk through some things on some longer formats. Also take some time to share my particular trading strategies, decisions I made during the week. So if you hadn't had a chance to check out last week's live stream, you can see the recording link down at the bottom of this video. I'd highly recommend you do so. I encourage you, I should say, to do so. And we'll see you as well at this week's upcoming live stream, 4 p.m. Eastern time after market close this Friday. So let's get to it. Let's take a look at what we are looking at going into this week, right? So as we discussed last Friday, of course, a bit of a slump going into the close, but it does look like that may have come as the result of some institutional funny business repositioning, however you want to talk about it. Something like that does look like it took place going into the close here, right? Very conspicuous slide down, right? This is something that looks a lot like what we might call a bang the close scenario. And especially, right, we see this, right, as soon as it gets into the close, we pop right back up, right? That's a good indication that somebody was shoving the price down, probably to try to control the options print to a certain extent, or needed a very excellent reference price. We may have, I think, a recap state coming in, so repricing of obligations in the options warehouse, the obligations warehouse. There may have been some sort of repositioning in order to maximally benefit that, as we've been talking about, right? So going into the end of last week, of course, we're approaching these deadlines that had to do with internalized settlement obligations dating back all the way to the second bond offering in June. And it's unlikely that any obligations that were internalized at that time would have something of a favorable repricing at the obligations warehouse, really inside of the next few months. It does look like GameStop, right? We talked about our technicals here. Does look like GameStop is poised to start moving back towards the upside. We are coming close to maybe about 65-70% of the way through, maybe a little bit less of a current sort of low volatility down cycle. Does look like we might be seeing a bit of increased activity before we really start churning following the expected September 17th federal interest rate cut. So all right. So what's doing with this? Why are we paying attention maybe to this type of activity going into the close? Well, I mean, that can cue us in to some returning volatility, to a bit of a price up if institutions did go ahead and try to secure the most favorable obligations warehouse repricing value going into the close. Then they may have done so in expectation that they will need to go in and clear out those obligations this week prior to August OPEX and prior to the 13F institutional filing deadline. We have seen some institutions come forward, but most of them have been very small in terms of their position size changes. The notable exception has been the Bank of Montreal, which published a position size increase of something like certainly over 2 million, approaching 2.5 million shares. So a big position, but really the big boys have not gone ahead and published their stuff, and they likely won't do so until the last minute this week. Another reason, right, I would point out, I would evidence that this is usually a good indicator for me based on options data that I look at, is when we see something like greater than 96% of all calls, all open interest on the call side for a particular week, when that expires out of the money, that's a good indication that someone has gone ahead and forced a lower than expected print. There has been some tampering with price action in order to make sure that the print for the week ended up lower than it would otherwise be with respect to typical, let's say, buying and selling flow patterns with respect to options hedging. So, right, a lot of what ends up leading to a slump, it's not a slump in general toward the end of the week. Most of what we see leading to a slump towards the end of the week has to do with out of the money call charm. What usually, I mean, there's also out of the money put charm. So usually, right, if we kind of get up during the week, we can kind of slip down into the end of the week as dealers go ahead, options dealers sell off their hedges for sold calls, which that is long shares, of course, given that most options contracts that are traded on GameStop tend to skew towards the ask side, although, right, that depends on the strike. But usually for out of the money options, it skews towards the ask side. Not always, but that's typically a good rule of thumb with GameStop. Now, what we usually see on a given week, especially a weekly expiry, I would say 90% of all weeks throughout the year, we'll see about 88 to 92%. It's going to fall somewhere in there. 88 to 92% of our options, maybe we can broaden out to maybe about 85, will end up out of the money. I should say on the call side. 96 is not typical. And in fact, we have seen occasions where we see, like, say, 98 or 99% on a Thursday. I've seen that a couple times. That's basically both times I've seen that, the very next day we popped, right, based on how high that was out of the money. Now, 96%, a little over 96, I think it came to like 96.1 or 96.2. That's not quite 99, and that's, that's on a Friday going into the next week. That's not a Thursday. So I'm not necessarily saying this is indicative we're going to pop off today. But that is something to keep an eye on. What I would say is also sort of corroborates the idea that maybe this week, maybe not today, but maybe this week, we go ahead and see a bit of volatility come back. Has a lot to do with, got to give a shout out to the Ultimator 5, who has been lights out with a lot of different indicators over on TradingView, TradingViews. Very excellent work, especially I do like Ultimator's Bottom Finder 2.0. So this is really good. You can use it with more than just GameStop, but I believe when he pioneered this, he was mainly aiming this towards use with SPY and GameStop. And what we can see, right, so basically if you look at this indicator here, when we get this kind of white signal, it indicates that, right, there's a number of things that Ultimator goes ahead and has this measure. It is secret how we put it together. But when these thresholds get crossed, we get a flash, right? So we get a white area here that gives us a bottoming signal. Now, when that pops up, as you can see, going back through pretty much all of 2025, we can see that within a few days, so this is on the 4-hour chart. I like it on the 4-hour chart. It works on other intervals as well, but on the 4-hour chart, I think it's proved especially effective. Basically, right within 2 days, we had a really big pop off back in February. Here's early March before we reversed into, I would say, mid-March before we reversed into earnings. See, it did go a little lower, right? So it's not that, well, the very next day or the very next couple of days, it might not pop off, but mostly right here, pretty accurate. Here, didn't exactly get the bottom, but got really close to the bottom following the convertible bonds 1.0 before it reversed. Then it got the bottom, and it did get this to the day. It got the bottom of our trend reversal before the Bitcoin pump. It got pretty close. I mean, a lot of this was after hour stuff, right? It got pretty close, basically said, how do you miss this, right? But convertible bond 2.0, right? Interesting that it didn't fire off, right, on the convertible bond 1.0, but only the double bottoming afterwards. Then we got this little pause, right? We had that very similar pattern here, sort of leading up to the Bitcoin announcement. We had one as well here. We had this kind of tripartite cluster of signals, but the first one, of course, did go ahead and give us the bottom before we had a nice little run up there. We had another one, another local bottom, second run up in this trend, and then we went back down, another bottom signal, and then we got some volatility come in about 2.5, 3 weeks ago. So right, each of these has even been pretty good at calling sort of local reversals. We just got another one of these. We got another one of these. Now it doesn't necessarily indicate it's probably something scaled towards implied volatility, but this would indicate that maybe some of these markups that I made on this chart right going into Friday, we might see some of this, right? We might see some of this. We are really close to a bullish PMO cross over on the 4-hour. I don't think we've made it yet. Let me double check that real quick. No, they're right. Not quite. Not quite. We're very close to one on Bitcoin as well. I'll get to that in a second. But yeah, we're really close here to a daily cross. Have we actually crossed? We actually have just crossed. If we're using the trading views version of it, we have just had our initial daily cross. Let's bump down to 4-hour, take a look. We have also just had, right now, as I'm making this video, had our 4-hour cross. So that's definitely something you want to see. If we bump down more, do we have something there? No, we're pretty close to one. Pretty close to one, maybe on the 2-hour as well. Interesting to see. Interesting to see. If we go over to Roaring Kitty's version here, over on stockcharts.com, we scroll down a bit. Yeah, they're right on top of each other here. We're still pretty far away from the bigger daily cross. I mean, the cross of the blue line is the really big one we like to see there. But okay, so we are starting to see some of these momentum indicators go our way. Good to see Ultimator's chart giving us a signal there. Obviously, right, some stuff popping up in the options data. Just in terms statistically, what are we typically looking at? Okay, we see over 96% of calls for a given week go away. We know we've got some deadlines coming up. This may suggest to me this is price positioning with respect to recap, something like that. We've also got some stuff looking good on the Bitcoin front, right? So this isn't huge necessarily in terms of, oh my gosh, GameStop's going to explode, but it's another little grain of sand, right? It's maybe one more straw that could tip the scales, break the camel's back, whatever metaphor you want to use, you go ahead and use it. We could see, right, we are seeing Bitcoin got pretty close to doing a new all-time high over the weekend. It did surrender some of those gains approaching market open because of course it did. But right, as this moves up, as Bitcoin continues to move up, that is going to have a subtle influence on what the minimum threshold, the lower bounds of our trading ranges will be on GameStop, especially while we're hanging out towards the lower end of our trading range. So as the higher Bitcoin gets, the more difficult it's going to be to push GameStop down towards the extreme low ends of its trading range, possible trading ranges, right? As that causes some appreciation in the fundamental valuation of what the company underlying the shares, right? Given that GameStop has Bitcoin as a treasury reserve asset. We did see some interesting block trades come in, not a ton. We did see some bids, so 24 was a pretty big block of short calls. We did see some interesting call blocks at the ask at 23 and 24.5 come in earlier in the day, so not as a consequence of rolling. Most of the rest of this OI change stuff was pretty neutral. That is, there were just as many trades at the ask as there were at the bid. So sentimentally, that doesn't really tell us that much. And a lot of it does look like it had to do with rolling OI from last week, which may have aggravated some of what we saw towards the end of the day, right? Once that stuff started moving or rolling. Gamma-wise, we do see ourselves back in this familiar 23 to 25 bracket. You'll remember going into the end of the last week, our low IV situation and the large amount of OI that we had at $23 made it such that our call wall was actually at 23. So that's very interesting. right? Max Pain has moved up from 2250 from last week to 23 this week. But we do have 25 back as our call wall for this week. That does suggest, right, if we do get some of that sort of, if there's settlement activity, if we get something that brings volatility back onto the tape, right, we could see this range kind of pull us up if we get into it. It'll stabilize it, right, but it should pull us up towards 25. We may see some trading in that 23 to 25 area before things then settle back down towards 23. I could see that if there isn't, again, this is a big if, but if there is an institution that needs to clear out some obligations, I could see institutions knowing this fact, having that volume sort of cleared out, getting some trading in the 23 to 25 range, churning up a little volatility, crushing it towards the end of the week, really crushing it coming out of August OPEX for a good 2 weeks prior to that 2-week run up into quarter two earnings, right? So going back several years now, remains to be seen whether this pattern will remain in effect. But basically, for quarters 2, 3, and 4, GameStop typically shows an earnings IV lead up effect about 2 weeks prior to earnings, and it's about a 4-week IV increase heading into quarter four. It's quarters 1, 2, and 3, which happen in quarters 2, 3, and 4. And then in quarter 1 of the next year, the Q4 earnings report typically has a 4-week buildup of increased implied volatility. So, so I mean, not necessarily. I would imagine, because we have been trading really down around the lower bounds of, I think, what GameStop can be valued at on a per share basis without it just equaling how much cash the company has. So that alone suggests that maybe we start to see a little bit more movement is introduced back to the upside here. But in terms of volatility, which of course is the juiciest element with respect to options trading, I do think there is a good chance we see some of that. But even if we don't see too much of a recovery there, I think we might. Well, really, I would say the most profound change will likely still is, echoing my thoughts from last week. We'll likely have to wait until the lead up to earnings to see that. But I wouldn't be surprised if we saw a little bit of churn this week, followed by some fluctuation, maybe back toward the downside, following August OPEX, coming out of August OPEX, to add a little bit more spice to the options market. So we'll see. That's what I'm looking for today. That's what I'm looking at this week. That's more or less my weekly outlook as a whole. We'll be following this, updating this as we go day by day. But it's always a good time with GameStop. It's always a good time certainly talking to you guys. Thanks for watching and listening. As always, look forward to seeing you all tomorrow. Thanks again for all of your questions, responses, shout outs, everything at the live stream on Friday. We'll have another great one this week. Definitely go check that out down in the link down in the description of this video. And we'll see you guys. We'll see you guys tomorrow. Thanks again. Take care.